What up, guys? Knowledge of Wealth here. Just want to do another episode of Beat the Market, talk about stocks. I want to go over why I have recently changed my mind over owning a home over renting a home. Sorry I haven't done a video in a long time. Work has gotten busy as well as personal issues have come up, but I just thought it'd be a good time to make a video here. Today I think S&P is back up, the Nasdaq's back up, S&P's about 1% away from all-time highs again, so stocks have started ripping again. I'll just go over just kind of some very recent trades and stuff. I have sold some things on high RSI and I've bought some things. So yeah, let's just check out a couple things here. And a lot of this is just recently AMDL. I have trimmed some shares today. SOXL, I've kind of slowly been trimming some shares on. See that upper right corner, the 74 RSI, that's basically measuring volatility. So I've trimmed some shares of that. Let's see what else. I bought some PLTU this morning. Let's see. As it went above the 5 down here, that's the 5-day moving average. And we have a lower RSI, but it looks like it's trying to reverse. TSLL, I bought just a little bit yesterday and today. It looks like it's trying to reverse. Let's see some other things. Maybe like a week ago, I bought the BTCI for my income portfolio, and that's kind of breaking out. Let's see. Yeah, I've been trimming shares of that SOXL slowly. I bought some GLDY. It's an income play on gold. Let's see. This is for my income portfolio. I have 2 different portfolios. It's 1568, and I bought it this morning at around that same price, it looks like. So this is my other portfolio, and this looks like about 5 days ago. I bought silver. I like to have a little silver access because, again, I've said before, it's used for a lot of technology, electric cars, batteries, different things like that. So that was like about 5 days ago, it looks like. Silver. It's up a little. Let's see, 63.83. I bought it at 60. Let's see. AMZU, I've had a little in both accounts, and I've been kind of trimming just a little every day because that one has taken off the past couple days. As you can see, it's shot way up, so been trimming a little bit of that. I just dabbled in ExxonMobil. That looks like yesterday, and I'm going to talk more about the some of the oil stocks here in a minute on my thinking on that. So yeah, I dabbled the other day. I'm going to wait to add. I'm going to definitely look to add to this one, but once it goes above that green line, that's the 5-day EMA. Let's see. Bought some iron. That is basically a data center play. I think they did Bitcoin mining, but they've moved over to data center stuff. So I bought that, I think, yesterday. Let's see, it's 47.37. Let's see what I bought it. 39. So it's already gone up quite a bit from when I bought it the other day. Let's see. Okay, actually that was 5 days ago I bought it. Okay. Let's see, anything else? Okay, today, BBAI, I view this as a speculative play. I don't go all in. I just kind of dabble here and there in this one. I don't put a huge amount, but I enjoy kind of trading it a little bit. It looks like it kind of wants to take off here, so I view that as an entry point. It's above the green line, which is the 5 and the 20. And if those kind of get close together and it goes above both of those and still RSI below 50, that's a pretty, could be a bullish signal. We'll see. Let's see what else. Yeah, that's just the stuff recently. Yeah, I wanted to talk a little bit about oil. How I had maybe a year ago, I want to say, I don't know exactly when it was, I was really loading up on oil. And I have been in recent, like maybe the past couple months, I've been really trimming it back. As you can see up here where the RSI goes above 70, I've been trimming in those zones to roll over into some of the tech that was beat up. Just look at the QQQs. See, the tech was a little bit struggling this year, and you can see it's starting to take off now. The QQQs are approaching a trim zone once it hits the 70 RSI. And I have been trimming some, like I said, that SOXL, which is like semiconductors. GGLL is one I have. Haven't trimmed that one. AVGU, I think I trimmed the other day. Or I need to trim it. I need to trim it tomorrow, maybe some more. But anyway, here's why I think I'm looking to add more oil again now. I'm basically probably looking at 3 stocks. Well, for my income portfolio, probably the XOMO. But here's the reasoning. I should have looked up the article, but I was watching a news program today, and there is tons of tankers. They're showing the map. It's just filled in the Gulf of America. Tons of tankers from all over the world are coming to get oil here right now. So these American oil companies, they could still explode. And again, I was trimming on the high RSI points here, but now it's going back towards a low RSI point. So I'm looking to get back in. I'm looking at the ExxonMobil. I'm looking at Chevron. And I'm looking at Occidental right here. And here's another thing that is crazy. They are all undervalued right now. I really trust the Simply Wall Street, their method of valuing companies. You just see ExxonMobil right here, 38% below fair value. Again, I'm going to time some entry points. I'm not, because it could keep going down for a little while. Here, Chevron, 49%. That's almost 50% discount here. And let's see, the Occidental, again, 50% below fair value. And if I'm correct, I think all these people have uh, some oil wells in like the Permian Basin and stuff, which has a huge amount of oil. It's got enough oil to supply the entire world for the next 1,000 years. Um, and again, I saw something. I'll ask ChatGPT here, but I saw something saying that tankers were coming to the Gulf of America to fill up. Yeah, let's see. Let's just ask ChatGPT real quick on that. I saw in a news clip today that their tankers, it must have been at least 50 to 100 coming to the Gulf of America to fill up on American oil. This was just a news story today. Is that accurate? See, yes, it's broadly accurate. The exact numbers, blah blah blah. So, yeah, it says down here that's actually within the believable range. So yeah, it ain't no joke, man. These could blow back up. Anyway, um, that's my thinking anyway. So that's kind of what I'm targeting next, and then also just maybe some stuff in the QQQ that is like lagging. Apple isn't really quite exploding as much, so I mean that's a solid one. A couple weeks ago, I was adding to the MU. I'm big into that, but that one's blowing up, so not a good time right now. Wait for a pullback. Tesla, I think you could still add to here. I think if Tesla gets some things right with the robots, they have some big unknowns and stuff. It's a little more high risk, but I think it could be huge reward if some things like work out for them. But yeah, you could totally add right here to that. So things like that. Maybe Walmart. I don't even think I own any Walmart, but I mean, that's in the queues. So some of those big ones that just aren't quite blowing up as much as Amazon is. Yeah, get some of the laggards. That's my other thought. So, and maybe some silver right here, really. Yeah, right here. If it goes any higher, you're probably a little too late, but right here ain't too bad to add. So those are my picks. All right. Real quick, why I changed my mind on renting versus owning a house. So I had already been kind of changing my mind a little on not wanting to own a house just because how expensive they are. The thing with renting, right, is that you don't have to pay for like a roof, a water heater, heating and cooling systems when those go out. That could easily be 10 to 20,000 bucks every like 10 years, possibly. I mean, maybe every 20 years, but eventually you're going to have to replace some of that stuff, replace the roof, things like that. Um, and I was discussing that with one of my clients, and he sent me an article of this guy, Ramit Sethi. He's really into finance, and a lot of what he's saying makes sense. But he's saying in the top like 100 cities, or no, maybe it was like the top 50 cities in the United States. 100% of them, it's right now more expensive to buy and pay a mortgage than it is to rent. So there's a big gap there. And then here's kind of beyond all that and the extra fees and stuff. Here's something that I asked like a month ago. I was asking ChatGPT about how much housing goes up per year. Housing goes up 4 to 6% a year. the S&P goes up 9 to 10% a year. So what I would spend extra in housing and on a down payment and paying the real estate agents to broker a deal, all that extra stuff, what you're paying for a water heater, I figure I could just put it into investments, whether it be, because so far I beat the S&P. The past 3 years at least, since I've actually been really active and know what I'm doing. I beat it by quite a wide margin. So, yeah, I just feel like my plan now, I have a income portfolio that I'm working on building up. I have that to generating about $400 a month. My goal is just keep building that up. On the dips, you can buy stuff for cheaper and build your income. And then when things are booming, you can trim and then, put it into laggards. So either way, pretty much almost every month, my income's going up a little bit. Right now, it's maybe by a couple bucks a month, but it's gonna snowball eventually. And, I can get to, let's say around here, I think I can find a small house for like $1,700 a month. Once I get this portfolio up to $1,700 a month, I don't got to worry about housing costs. That takes a huge burden off. So that's my plan for now. And then I'll have the principal on this income portfolio. If there's a housing crash, I can simply just, like there was in 2008 when the housing just completely dropped. If that happens, then I can buy a house. So, yeah, look up some of the stuff on Ramit Sethi. He has a video and like an article on renting versus owning. And a lot of it's kind of propaganda by the government and by real estate agents because they profit, right? The government gets property taxes, real estate agents gets a huge cut. So, and I'm not saying it's not the right move for some people to buy a house, but if you are a disciplined investor, it kind of doesn't make sense right now. It does force you into an investment, paying into it every month. So for a lot of people, that's probably good. But yeah, like almost my whole life, I'm like, yeah, you gotta buy a house. You gotta buy a house. Oh, you're just throwing away money for a rent. Well, one thing in that article, he's like, if you go to a movie, you're not throwing money away. You're getting an experience. You're getting a service. And another point he made, people say, oh, they're just making money off you. Not necessarily, because the people that rent out their house or whatever, they can only charge what the market can bear and stuff. What the market kind of dictates what they can charge. A lot of them are making a little money. A lot of them are losing money. So it's not always true. So you're really not just throwing money away by renting necessarily, because you're paying for a place to live, a roof over your head, and all that. So, I've kind of just changed my mind frame. And I think in his video, he said he'd been a millionaire for like 20 years or something. I think that's what he said. And he said he's not bought a house one single time ever. So you got to run the numbers. You got to make the decision for yourself. If you're going to live in a place at least 15 years, it could make sense just to buy a house. But, yeah, for me, I've rethought the whole thing recently. I was at my friend's house like a while back, a few months ago, and her mom was saying like they had all kinds of plumbing stuff, appliances go out, and she was renting. She didn't have to pay for anything, right? And that was all within like the first year. If that was not a rental situation, she'd be out like tens of thousands of dollars. So, yeah, it was, it's a long story, but it was like a major plumbing thing. Like, yeah, I won't get into the details, but it was a major, major issue. So, and on top of that, um, I've been thinking about Bitcoin lately. I buy a lot of Bitcoin. That's another portfolio I have. I think of all these as different like buckets, right? So I have my Bitcoin bucket. That is the only asset that is backed by something. It's backed by energy. It costs money to produce it. Houses is propped up by the dollar that they can print freely. Stocks are propped up by the dollar they can print freely. They can issue more shares of stocks. So they can literally make houses, stocks out of thin air. If you really think about it, if you really know how the monetary policy works, the the Fed can just print money at will to buy houses, to buy assets. They actually said that on their Twitter not long ago. It was the Fed or the U.S. banking. It was some major account said we can just print money out of thin air. They actually admitted it. So in a way, treating houses as an investment kind of wrecked housing. People are suffering. The average American family cannot barely afford housing and groceries right now. So the fact that people view housing as an investment, I'm not against it. Like your small time guys that have like 5 to 10 houses, they're not really affecting it too badly anyway. They're affecting it at a nominal percentage still, but also like the BlackRock or these major companies that buy like just tens of thousands of homes, they're really driving it up. So I think just this mindset of society that houses are an investment, it's kind of immoral because it's making it harder and harder and harder for just average people to afford housing. So just from a moral standpoint as well, and with property taxes, you never really truly own it. Those just keep going up and up. So, I mean, I think the last true property rights we have is Bitcoin because it's about the only thing out there that's decentralized, can't be manipulated. It's backed by real energy, which makes up the entire universe, makes up energy. It's locked in time. You can only mine a block every 10 minutes. So there's that difficulty adjustment. And, but dollars, it costs nothing to produce. Stocks are propped up by that. Housing is completely propped up by that. It's propped up by nothing. So, just some food for thought, anyway. And I think Bitcoin has been the play of the year because it's kind of been lagging everything. It's been lagging bonds, gold, silver, the S&P, the Dow Jones, the TLT. Yeah, Bitcoin has been kind of lagging everything this year, so could be a good entry point for that as well. So yeah, you want to buy things when they're kind of like unpopular, and then maybe trim back when they're popular. Although I'm trying to just accumulate Bitcoin whether it's up or down right now, because I think in the long term we're gonna see 10x. I would be surprised if we don't see 10x in 10 years. I don't think the returns are going to be as dynamic, but I really see it. I see it growing at about 21% a year for the next 21 years, basically. And I just don't see it going away. If you have a lower time preference, I have a good amount in my income portfolio. There's STRC. It's a MicroStrategy. They do a 11% perpetual preferred stock, and it has very low volatility at about 2%, which is drastically below the S&P or bonds or anything like that. So it basically stays at $100 and it pays you 11%. So if you want something a little steady, like a baseline for like an income portfolio, because the thing with Bitcoin, it can have wild swings for like a few years. So you might see a bear market for 2-3 years on Bitcoin. It is possible. So it all depends on your time preference. So anyway, that's an option to look into as well. Yeah, that's about all I have for you guys today. All right. Peace.